Hi everybody, I'm Kimberly and welcome to Auto Finance Sense, where I help you make sense of the dealership finance office the next time you buy a car. Let's get started. Hi guys, Future Kimberly popping in here real quick just to let you know that there is so much information that I wanted to cover on this topic that I could not possibly squeeze into one video. Maybe we could do a live or a discussion somehow. I'm definitely going to be doing more videos on it. But the other thing I wanted to let you know is that I'm a bit of a history buff, so for the first 3 minutes of this video, I talk about the history of warranties on cars. If you're not into that, then I left timestamps in the description box below. Thank you so much for being here, and let's go. In 1908, Henry Ford gave his word that 25,000 successful cars bearing the Ford imprint are in use today and are just so many testimonials of Ford's success. This is your guarantee when you buy a Ford car. By the middle of the 1920s, however, Ford was providing a 90-day warranty for parts and a 30-day warranty for labor. It wasn't until Henry Ford perfected the assembly line and supply chains that consistent quality could be assured and be backed by a definable warranty. A 1925 Ford offered the typical warranty of the day: 90 days on material, 30 days on labor, with no guarantee whatsoever on fan belts, glass, bulbs, wiring, transmission bands, hose connections, shells, rollers, spark plugs, or gaskets. The Maxwell Motor Company, which was the ancestor of the Chrysler Corporation, gave buyers of its Maxwell cars a 90-day warranty against defects, and it didn't cover tires, rims, coils, batteries, or lamps. The 90-day warranty would outlive Henry Ford and become the industry standard right through to the 1950s. In 1960 came Ford's comprehensive 1-year, 12,000-mile new car warranty, the longest offered by a mainstream manufacturer because around this time imports from Europe and Japan were starting to arrive in the United States. It was quickly eclipsed, however, by the 2-year, 24,000-mile coverage, including related labor, on the 1961 Continental. When my dad purchased his brand new 1970 Dodge Charger right off the showroom floor, it came with a whopping 1-year or 12,000-mile new car warranty. It was a good thing that he knew how to fix cars. Warranties had become a persuasive marketing tool to sell cars. And by the mid-1960s, competition between the big three automakers saw their engine and powertrain coverage lengthen to as much as 5 years or 50,000 miles. Longer warranties proved to be expensive for automakers that were pumping out poorly built cars. In 1965, for example, Chevrolet assembled more than 1 million Impalas at an insane rate that has never been topped. And the quality, as you might guess, was not so good. By the 1970s, warranty terms wobbled back and forth. But the positive effect of generous warranties on auto sales did not go unnoticed. American Motors, which had a spotty reputation for reliability, doubled its bumper-to-bumper warranty briefly to 2 years. Its enhanced buyer protection plan, which even covered wear items like brakes and clutches, and they had the audacity to provide, quote, a loaner car to use while your car's being worked on. It gave AMC a significant but short-lived sales boost. Enter the vehicle service contract, aka extended warranty. Sidecar. A true warranty comes with the manufacturer with the purchase of your car, while a vehicle service contract is an extra protection that you have the option to purchase for your vehicle that extends beyond the manufacturer warranty, thus inaccurately called extended warranty. There may be a certain exception to this, and I'll discuss it later in this video, but moving forward, I will be using the term VSC for vehicle service contracts. In California, it's called mechanical breakdown insurance. Now, during the 1970s, the VSC business grew quickly, and as claims began rolling in, a lot of companies found themselves unable to pay, causing them to go out of business. Smaller companies fell apart and larger ones took over. And in the 80s, with gross profits shrinking, VSCs quickly became a staple at automotive dealerships. I think I'm going to insert a disclosure right here. In today's world, the term extended warranties seems to give people a lot of angst. I'm not here to sell you anything. I'm not here to talk you into getting a vehicle service contract. I am here, however, to help give insight on how they work and how they're built. It's for you to decide if it's something that you want or not. I say this because I've seen so many nasty comments to those that have purchased VSCs and vice versa. And I'm just letting you know that I will not tolerate mudslinging or name calling in the comments of my channel. It's just uncalled for. Some people buy VSCs, never use them, and never buy them again. Some people buy VSCs and are thankful that they had it whenever they get hit with a large bill because of a covered issue and will continue to buy them. The bottom line here is that no one, except the finance manager, cares if you decide to get one or not. It's your business and yours alone. All right, first let's talk about new cars. A new car will come with a limited factory warranty. Why is it called limited? Because it's designed to protect almost every component in between the bumpers, but it does still have exclusions and it is limited to a specific time or term. A most common term that you might hear is a 3-year or 36,000 mile bumper to bumper, even though technically the bumper isn't covered, and a 5-year or 60,000 mile engine, transmission, powertrain portion. Your term depends on whichever comes first, 3 years or 36,000 miles, 5 years or 60,000 miles. Some manufacturers like Kia will come with a mixed bag of terms. They have a 5-year or 60,000 mile limited bumper to bumper with a 10-year or 100,000 mile powertrain, while there's only a 336 on their audio equipment system. Manufacturers are fully in tune with the statistics of their parts, both in powertrain and the computers and electronics. Now, there are VSC administrators that can be represented by companies that contract with dealerships to sell their products in the dealership finance office. These companies don't come in with just a vehicle service contract. They come in with an entire suite of products like Gap and Tire and Wheel, Key Care, Dent and Ding, and so on. And it's not easy for them to get their foot in the door of dealerships, especially large groups and manufacturer dealerships. Their products better be good, and they better make the dealership money. If they turn out to be bad products, everyone has big problems. The customer, of course, the general manager, the service department, and the finance manager who sold the product. And dealerships can only try and control social media so much. Everyone will hear about it. And in this video, I am only talking about dealership administrators and not the ones that you see that pop up online. You maybe get flyers in the mail or phone calls. They do not have the same guidelines as a manufacturer dealership would, and pretty much can do whatever they want. When you are offered a vehicle service contract in the manufacturer dealership finance office on a new or newer vehicle, 99.9% of the time it is exclusionary, and that's what you want. Exclusionary means that everything on the vehicle is covered except for what is not covered, and you will find a list of those exclusions on the vehicle contract itself. So if you want, you could always ask the finance manager to go over those exclusions with you. You may hear the finance manager say something like, well, it's easier to tell you what is not covered than to tell you what is covered, and that's exclusionary coverage. It will often closely mimic the original factory warranty, which is where the term extended comes from. Okay, let's talk administrators. Many manufacturers will brand and or back the same exclusionary coverage with their name. And a savvy finance manager might use that fact to sell a $2,000 VSC for $5,000. Not all manufacturer dealerships have contracted with the same administrator. For example, a Ford dealership might have contracted with JM&A, CNA, or EasyCare. A Subaru dealership might have contracted with an administrator other than the brand's Subaru Added Security. It all depends on the dealership. So picture dealership service lanes. Cars are coming in and out all day for service and repair, but not everyone has the same VSC. You're in the GMC dealership, but the person in front of you might have Zurich, and 2 cars back might have Fidelity, and not everyone has GMPP. Now, in almost all states, it's 100% up to the dealership finance manager as to how much they mark their products up. And for VSCs, that markup is usually around $1,000 to $3,500. So that's how much room you have to negotiate with. A question that I get asked almost weekly is, well, Kimberly, it comes with 3 years of warranty, so can't I just wait until that's up and then buy an extended warranty? Why are they always trying to sell me an extended warranty on a brand new car? It already comes with it. Well, of course you can. You can choose to get a VSC most any time you'd like. However, here's how they're built. The price and the choice of term and level of available coverage is based on the age and the mileage of your vehicle. So I usually tell people to take your time, do your research, and ask all the questions. If after you've done that and you still have decided that you want to get one, then get it as soon as you think about it. Yes, you will have some overlapping coverage, but that's when it will be least expensive and you're going to have the largest selection of term and coverage available. I don't have a crystal ball, but from my experience of working congruently with multi-brands, you certainly have time to think about it when buying a brand new car. For me, I would probably make that decision before 6 months or 5,000 miles, and usually the first thing that will go is that 10-year option. Another question that I often get asked is, what is the typical length of an extended warranty? What do most people get? I've even seen people take a VSC according to their loan term. But what you want to do is take a look at your driving habits and customize it. Do you think you'll put 100,000 miles on your new car in 6 years? Are you a high mileage driver or a low mileage driver? Do you think you're going to keep this car 10 years? If you do about 10,000 miles a year and you think that you're going to keep it a long time, then a 10-100 might fit you best. If you're on the higher side of mileage, then a 5-100 or a 5-125, that's 5 years, or 125,000 miles, whichever comes first, it might be a good fit. But weigh the prices between the terms too. If you're just not sure, then you might want to bump up the term just in case. Now, when it comes to used vehicles, the type of coverage could be different. For example, if you're talking about a much older, higher mileage vehicle, you might be offered stated coverage. Stated coverage simply means that instead of telling you everything is covered except for what is not covered, which is exclusionary, aka bumper to bumper, now they're going to state on the contract exactly what is covered along with the exclusions. It's a lesser coverage, and this is definitely something that you want to pay attention to. I know this sounds crazy, but I have heard so many people say that, well, I'm going to buy this $5,000 car and just get an extended warranty, that'll fix everything. Or I have this issue that I know will cost me big bucks along with more issues to come, so I'm going to buy an extended warranty to get them fixed. Which is why most will require either an inspection first or a waiting period. The point is, have the knowledge of how they work first before you go dropping a big chunk of money on a VSC. Now you might hear the different levels be called things like gold, platinum, titanium, gold plus, or diamond. And they're typically that bumper to bumper exclusionary coverage. But as you come down in levels, less will be covered. They might be called silver or bronze. You'll have a choice of deductibles as well. The industry standard deductible is $100, but you might have the option of a $500 deductible or $250 or even a $0 deductible. Something you want to be sure of, is this additive or inclusive in term? So if you get a 7-year or 60,000 mile VSC, is that 7 years from the day you purchase it and 60,000 more miles on top of what is on it right now? Or is that 7 years from its in-service date, which is the first time it was titled, or 60,000 miles on the odometer. Many CPOs or manufacturer-certified pre-owned vehicles will advertise that they come with a 7-year, 100,000-mile powertrain warranty. While all brands are different, and some are much better than others, by the way, this typically means that you will have the remainder of 7 years from the first time the vehicle was sold, aka the in-service date, or when the odometer hits 100,000 miles, whichever comes first. The finance manager will then offer you a wrap, like a regular VSC, which wraps the entire vehicle, computers and electronics, as well as powertrain too. Now, let's talk about lifetime warranties. Some dealerships offer a lifetime warranty, which is typically powertrain type only. Other dealerships include them for no added cost when you purchase a vehicle, but they might only be available on certain models. In my opinion, I find that most of the time you are paying for them in what's called a pack, you just don't realize it. And I also find them to be gimmicky for dealership marketing. They generally have tiebacks where any and all work, even sometimes your ongoing maintenance, must be completed at that selling dealership, which could become inconvenient if you move or you break down while you're on a trip. Be sure to read the fine print and ask the questions when it comes to these lifetime warranties. It's already really difficult to research VSCs, and even more so by using online reviews. People leave reviews when they're standing in the service lane getting hit with a giant bill for something that they thought was going to be covered under their extended warranty. I know I would. So what are some alternatives to getting a VSC? Well, you could pay for it out of pocket. You could start a dedicated savings for auto repair. Or you could fix it yourself if you're able to. You don't want to void the VSC, and most of them will be voided if you do any kind of engine enhancement modification. All VSCs should come with some sort of cancel policy. Some have a 100% refund if the vehicle gets totaled, for example, but always check the cancellation policy. Most will have a flat cancel period, which simply means that if you cancel within a certain period of time, you'll get 100% of your money back. Check for the transfer clause as well. So for example, if you sell your vehicle privately, does your new owner have the option of taking over the remainder of your VSC? There's typically a transfer fee of, say, $50 and some paperwork to fill out, but you can charge whatever you want and ask the new owner, do you want this remainder of the VSC or not? If they don't, then please make sure that you cancel it so that you'll get some money back. I did do a video for Car Edge on how to properly cancel your VSC or Gap or any other products for that matter, with tips, tricks, and secrets on how to get it expedited and do it the right way. I'm going to leave that link below in the description box. And with that, I hope everybody has a wonderful rest of their day. Be kind in the comments below, and I will see you soon. Hit the like, subscribe, and notification bell. Bye-bye.